We have more chaos unfolding economically, financially. Hey, bulls and bears, welcome back. You're watching Bull, Boom, Bear, Bust, back with another dose. Things are continuing to worsen and get more and more risky out there in the economy, in the financial world, if you will. And it's going to affect a lot of people, even people that are sitting on the sidelines thinking you're not going to be touched or affected by this. I think by the end of this video, you're going to be sharing some of my thoughts and concerns about the broader U.S. economy. Now, a lot of us here have been bracing for this, so I think we're doing very well. My investments, especially my 401ks, have been doing really well because I've been sitting, as most of you know, out of stocks in a money market, and the yields actually jumped up on that because what's happening in the bond market. And we're going to talk about that here in just a few minutes. But first, let's get into this. We have more Americans now saying that they are struggling. This number of Americans living paycheck to paycheck's been fluctuating in different surveys, move around a little bit, but it's about between 68 and 72%, somewhere around there. Well, it just got worse. Take a look at this. We just got another survey out. 73% of Americans now are financially stressed. 2/3 say tariff concerns are the source. Now, to me, it's a little bit too early to think that tariffs would have an impact as of yet. And by the way, there's some news coming out in the tariff news sector that may be surprising to some of you because there's certain items that are going to be exempted from these tariffs. And we're going to talk about kind of the winners and losers of this tariff war here, this trade war. But 2/3 now say that tariffs have affected their finances. Now, I didn't think that tariffs were yet affecting things. I actually went to one of my favorite grocery stores, though, just recently and couldn't find any avocados. So I had to go to a larger chain grocery store where they're usually like over $2 each, like $2.50 each for one avocado. I used to be able to get them at the smaller grocery store, grocery outlet, usually like 3 for $5, which is like $1 something each, like $1.70, whatever it is. So a little bit more I had to pay. Not a backbreaker financially, but it is something that I did notice. And could it be because of the tariffs? And of course, a lot of avocados come from Mexico. Maybe we'll see the store that I went to. Maybe we'll see them restocked here in a few days. Maybe today. Maybe I'll check this week and we'll see how that goes. But have you noticed any differences because of the tariffs? Well, there's a lot of people that are. But first, back to this number here, 73%. And here's how they put it over at CNBC. Americans are growing increasingly uneasy about the state of the U.S. economy and their own personal financial situation in the face of stubborn inflation and tariff wars. Of course, all of us here, we knew that inflation wasn't going to go away. We knew that inflation was going to continue to, cost of living, I should say, rise. That point, 73% of respondents say they're financially stressed. The survey of over 4,000 adults conducted between April 3rd and April 7th, so it's very recent. On average, more than 70% said that they're stressed about their personal finances. This year found that almost 4% of all, or 40% of all respondents said they're very stressed, and 29% of high earners with incomes over $100,000 or more also shared the sentiment. So like 1/3 of people making $100,000, right? $100,000 is the new minimum wage. I mean, in a lot of states. I mean, some of you may be laughing at that, but try to live on $100,000 here in California. And I can tell you, for one, I live in California, and making $100,000 wouldn't really do it, right? If it weren't for multiple streams of income, I would have had to move out of this state a long, long time ago. And actually, once my kids are out of school, I'm still thinking about moving out to California. I just have to have the kids get a little bit older and not be so attached to their schools. I know some of you are saying it shouldn't matter. The adults should make the decisions. Yeah, the adults making the decision. And I'm thinking it's going to be too chaotic to pull my kids out of school right now. But we're doing okay. See, financially, investing and having multiple streams of income allows me to live in California. And I love the weather. And I still am able to make it here because of investing. But my concern is not everybody is investing. And the ones that are investing, they're just passive. And most people are just passive investors. In other words, the stock market drop that we saw here recently, most people with retirement accounts took a big hit financially to their retirement accounts. I think that's one of the reasons why we're seeing these financially stressed numbers jump up to well over 70% now. And who knows, we may be seeing another survey that comes out in a few days that says it's 78%, 80%. We don't know, because the tariffs really haven't hit stride yet as far as being that noticeable, unless my little avocado situation is because of tariffs, but we're going to find out. But something that is noticeable right now to people is cars, the used car market. And we have a lot of car dealers right now desperate to get more inventory. And so you might have noticed, if you bought a car in the past couple of years, that you're getting a call or an email or both asking to buy back your vehicle. So there's a big surge in dealers looking to buy back vehicles that they sold just in the past couple of years because of the threat of higher import costs and higher auto costs. And here's how they put it over at Bloomberg. I need to buy your car back. The tariffs are causing chaos at dealerships. Used cars have become hot commodities as this trade war rages on in the automotive industry. Now, some of you may be saying, well, it's just new cars that are imported that are going to have the higher prices. Well, yeah, remember, when prices jump up for new cars, more people are going to want used cars. So you're going to see a bigger demand now for used cars. And that's where these dealers are having concerns about not having enough inventory. And we've seen dealers, they've been kind of hoarding their inventory. They haven't been cutting prices. They've been buying overflow lots and using some of this vacant commercial real estate to park more cars. Instead of cutting prices and getting rid of inventory, they've been looking for ways to find more space to keep the inventory, because I think a lot of these car dealers knew that more inflation was down the road, that there wasn't going to be some sort of economic deflationary event where the car prices and more were going to actually drop. So I think most dealers were actually correct in anticipating more inflation instead of deflation. All right, and a quick story on this. My sister sold her Honda CRV. It's like 180,000 miles on it in 2014. She sold it to Carvana. Right, they were sending out these advertisements or emails or whatever, offering to buy vehicles. And she got quotes from like CarMax and even a local dealer in Carvana. Carvana paid her $4,000 for her Honda CRV, pretty good condition, but it had 180,000 miles on it, right? High miles. And she offered me the opportunity to buy it for that price. I'm like, that's kind of high miles, but now I'm kind of thinking maybe I should have, because I looked at the ads, and Carvana and others are selling cars and Hondas, especially with 170, 80, 90,000 miles on them, for like between $7,000 and $9,000, folks. So this car price bubble is not bursting, just like the housing bubble is not bursting. And people said I was wrong for years about the cost of living. They said, well, prices are too high. What goes up must come down. Well, if what made the prices go up is still happening, then prices don't have to come down, folks. I mean, we've seen this numerous times in other countries, and I have to come back to this from time to time to remind people that just because something goes up doesn't mean it has to come down. If all the underlying issues that cause prices to go up in the first place are still with us, then prices don't have to come down. If there's still, the banks are loaning out money without many restrictions, banks are still loosening guidelines now and offering bigger lines of credit, offering more subprime loans. Even though defaults are increasing, delinquencies are increasing, banks are still loaning out money. We still have the billionaire class out there still buying homes, obviously still buying vehicles, car dealers still buying vehicles, paying top dollar for vehicles, turning around and selling those vehicles for very high dollar amounts, because banks are still able to give out more subprime loans. And you see, it's one vicious cycle, right? It all stems from the source of money, though, from the banks, from the lending. Yes, there's cash buyers out there and the top 10%ers that don't need loans. But folks, you see where this is going. What I'm saying is, if something isn't stopped or changed within the way money is loaned out, you're going to continue to see the cost of living climb and climb and climb. And yes, there'll be some areas here and there where you'll see some price corrections, just like we saw the price of cars come down a bit over the past 3 to 4 years. On average, about 10 to 30%, depending on what type of vehicle you're looking at, price corrections or a little bit of declines. But overall, folks, I think we're going up again here. not just with automobiles, but the overall cost of living. And I think most of you would probably agree on that. And if you look at the surveys, more people are financially stressed right now because of what's happening. Right? And I know some of you in comments will say, JJ, yeah, but things are going to get better. We just have to go through this short-term period of pain and higher prices. You could be right. You could be right. There's a phrase going around right now that, what is it? Short-term pain equals long-term gain, right? Short-term pain, meaning higher prices now, are going to equal long-term gain. In other words, a better situation over the hill, grass is greener on the other side, whatever you want to call it. That's what many people are thinking is going to happen. But I would caution you against being so optimistic, right? I shouldn't say that because I don't want people to be depressed or scared or frightful, but I would encourage you to continue to prepare, to look for ways to try to make money from this and take advantage of what's happening right now. Because with the writing that's been on the wall for months, right, we all saw this coming. And I should note here, my 401k is doing really, really well. I moved most of my stocks into a money market sort of thing where you get like a 4% yield. Yields have actually been rising because people are dumping U.S. debt because of this trade situation, right? So my yields have been rising in my 401k, and I'm still like 20 something years from retirement, so it's not going to be cashed out tomorrow, but it is nice to see the 401k growing in this situation where, it's really concerning about being able to make ends meet with the cost of living the way it is. And here's how they put it over at France 24. Investors dump U.S. government bonds as faith in America falters. That sounds pretty dire, doesn't it? Faith in America falters. Investors are dumping once reliable U.S. government bonds, sparking fears that major banks and traders have lost faith in America as a safe place to store their money. So maybe I'm in trouble. Maybe my investments are going to blow up here. That could be bad news for the current administration, who'd hope that this tariff pause earlier this week would restore confidence in the market. Yeah, we did see some big up days after that pause. And what they did is they dropped the tariffs down to 10% for most countries. Remember, this is worldwide tariffs. But with that pause, we saw a big jump up in the stock market, like 2,000 plus on the Dow. But then what do we see the very next day? Another huge red day. Even with the tariff pause, it's not really a pause, but still in place. They're calling it a pause. It wasn't a complete pause. So what does this mean? We're still seeing big volatility in the stock market, folks, even with the pause. And here's how they put it over at AP. Freak sell-off of safe haven bonds raises fear that confidence in America is fading. The upheaval in stocks has been grabbing all the headlines, but there's a bigger problem looming in another corner of the financial markets, rarely getting headlines, and that's the bond situation, folks. Normally, investors rush into treasuries at a whiff of economic chaos, but now they're selling them as not even the lure of higher interest payments on the bonds is getting them to buy. So that's why we're seeing the spike, folks, in this yield, because in order to attract buyers, they need to offer higher yields. And so therefore, people that are sitting in these bonds in their retirement accounts, in money markets, even your bank may be offering like a savings account with a yield that's now going to be maybe going up a little bit. But also the risk is going up, because if the bond market blows up, folks, all of us are in a big world of hurt. And the bond market is just a monster. And compared to the stock market, the bond market is exponentially much more important and systemically proposes a bigger risk to the entire financial system and the markets. Right, and they continue over at this article, quote, "The fear is the U.S. is losing its standing as a safe haven," unquote, said George Cipollone, a fund manager at Penn Mutual Asset Management. Quote, "Our bond market is the biggest and most stable in the world, but when you add instability, bad things can happen," unquote. That could mean bad news for taxpayers paying interest on ballooning U.S. debt. That's another thing. We're supposed to be cutting spending, but we see the debt accelerating. The national debt's accelerating. Not only is it not stopping or slowing down, it is accelerating. So I think we're being fed a line of a bunch of bull. You know what I'm talking about? That type of bull, not the bull boom, but that other type of bull, that I won't say the word. I think that's what we're being fed out of this administration, folks. And we know all administrations, they fudge the numbers, they lie, they try to deceive people and make people look elsewhere. But I think we know what's really happening here, folks. And a little more over on this bond situation before we move on to some other stories here, some other news. A week ago, the 10-year bond yield was about 4.01%. On Friday, the yield shot up to as high as 4.5%, but 4.58%, even worse, before sliding back, or better, depending on your position, or sliding back to around 4.5. That's a major swing for the bond market, which measures moves by the hundredths of a percentage point. So that's one of the biggest swings that we've seen in many years, the biggest swing in a small amount of time, I should say. So as yields move higher, you'll see your borrowing rates move higher too. So now rates on credit cards, loans, even mortgage rates are likely to go back up. That's going to be good for someone on a investment, just sitting in bonds, for example. T-bills are going to be still rewarded more heavily, but the risk is also increasing. So be happy that your yields are rising, but also be cautious and maybe try to leverage and try to diversify a little bit here. You know what I'm saying? Especially when you have the safe metal or the safe haven asset, precious metals, especially gold. Really, a lot of people are rushing into gold. Look what's happening to gold here recently. And people, as I'm recording this, $3,254 and some change. And look at this 1-year chart, folks. I mean, this is total bull run here. And how does this bull run end? I think we're going to see a pullback at some point, but if the chaos and uncertainty and all this new news keeps coming out daily that continues to shock and even frighten people, then you could see this safe haven continue to explode to the upside. Who knows where the top is? Some people are saying there's not a top because there's so much fear and uncertainty out there. There's going to continue to be this flight into gold, folks. And I would think silver would have some heyday along with gold. We're seeing the ratio, though, widen because gold's taken off more than silver, unfortunately. And a lot of people are in silver because it's more affordable. But we're going to have to see how this plays out, folks. But I would say look at these other options if you're concerned about what's happening right now. Now, still on the topic of tariffs, Apple, Nvidia, Dell, and others get tariff exemption under some new rules that were just rolled out. The U.S. Customs and Border Protection Agency announced good news for these companies, Apple, Nvidia, Dell, and others. Late Friday, a new list of goods to be exempted from the latest rounds of tariffs on U.S. importers was released, and it includes smartphones, PCs, servers, other technology goods, which are assembled over in Asian countries mostly. So I see that this administration has some concerns about the rising costs, especially for tech. And what does that tell you? That tells you that the confidence in bringing manufacturing back here, especially tech manufacturing, probably isn't very strong. I think they're probably very unsure now about the ability to bring these jobs back in a timely manner, or if at all. Right, and it's interesting because we had this huge bump up in the tariffs against China, for example. The latest round of tariff is 125% for Chinese goods and 10% on imports from other trading partners. China also had an additional 20% tax on its goods that begin in March, bringing the total to 145%, folks. That's what's being reported here. This is out of MSN. And they're citing a Barron's article, folks. 145% with that extra tax that was just put on here recently, folks. That's very, very concerning. Especially when you look at the way the U.S. economy it's gauged on spending. And mostly things that aren't made in the U.S., mostly imported goods here, folks. And when the economy is based on spending and have this big of a jump up in the cost of imports in the country that we import the most from, China, folks, this could be something huge that could still take a lot longer to play out. So what we've seen unfold here recently and so far may be just the tip of the iceberg. All right, people, a little more to jump into today before we wrap this up here. Something pretty interesting, though. A California burger chain owned by Kevin Hart, or co-founded by Kevin Hart, co-owned by Kevin Hart, the actor, the comedian, abruptly closes all locations. And this was a vegan fast food place co-founded by comedian Kevin Hart, with different locations around the LA area, abruptly closed all its locations. So this vegan and non-meat alternative place, which was a lot of vegetable-based patties and burgers and meals, abruptly had to close down. On Instagram, Hart posted a farewell message. He said, "Thank you," with a heartfelt goodbye, and now we start a new chapter, is what he said. It is the latest of a long line of restaurant chains to continue to struggle this year. I'll tell you one place that's not struggling. I just drove by In-N-Out Burger last night, driving around. In-N-Out Burger is still lying around the block, folks. It's crazy here. Southern Californian people here, In-N-Out Burger, you know what that's about, right? A long line of restaurant chains continue to struggle this year. Yesterday, BurgerFi announced that it filed for bankruptcy. One of more than 10 big names to do so far this year. The highest profile was Red Lobster, but the Hart House, which is Kevin Hart's burger place, announced plans to expand recently, including other locations, has now appeared to have reversed their decision. And here you go. Here's Kevin, and he wants you to eat some fake meat. Is it fake meat or is it just vegan? Is it vegan burgers? And of course potatoes. And he wants you to come into his place and eat, but you can't because they're going to be closed. So just another symptom, folks, of what's happening here. Some people will strive and thrive. Other people, not so much. Let me know what your thoughts down in the comments. Are you doing good at this time? Are you seeing your yields rise with your money that's sitting there? Do you feel safe where your money's sitting right now? Are you jumping into precious metals? Are you jumping into the stock market with this dip? I bought a little bit of a dip last week when we saw that huge sell-off. Sold it the very next day, folks. It was a fund. It wasn't an individual stock. It was a fund. So that was a nice little trade, but it's going to take a lot of that to keep your head above water in this economy. Let me know what you think about this, folks. As always, keep stacking. See you down in the comments. Bye for now. Peace.